Good morning and welcome to IG's early morning call on Monday, the 22nd of January. I'm Angela Barnes. Coming up on today's programme, well, in equity markets, the Seng dropped after the People's Bank of China holds the LPR rate steady. The Nikkei rally also continues and European markets are set to open higher. The central banks markets anticipate the Bank of Japan, Bank of China and European Central Bank to keep their monetary policy unchanged. And US earnings season. The pace of publications is set to accelerate this week with reports from Netflix, Tesla, Johnson & Johnson, Procter & Gamble to name just a few. But first, let's take a quick look at volatility this morning. If I can just pull up the VIX chart for you and let's take a look. Well, the VIX has remained muted despite geopolitical risks and has declined since a peak on Wednesday, the 17th of January, reflecting the market's uncertainty about Fed policy and the economic outlook. On the day, it's currently down about 0.68%. Well, with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe. Well, the FTSE 100 is currently set for a higher open, up 0.36%. France's CAC 40 is also in the green, up 0.87%. And Germany's DAX is also set for a higher open, up 0.81%. Well, European markets ended the trading session slightly lower on Friday, erasing gains through the morning and previous session. Mining stocks led the losses, while technology stocks rose 0.6%. Well, after Davos last week, attention now returns to data releases and corporate earnings updates for the fourth quarter, along with full year guidance. Well, overnight in the Asia Pacific markets, let's have a look at what the picture was like as China's loan prime rates remained unchanged as expected. Well, we can see the Nikkei 225 hit a near 34-year high. It rose 1.62%. And then we've got as well the Hang Seng. Well, that fell on the other hand, and that was led by real estate stocks down 2.76%. And then in Australia, the S&P ASX 200 gained up 0.75%. Well, investors will be keeping across the Bank of Japan as it kicks off its two-day monetary policy meeting today, announcing a decision tomorrow. Well, let's have a look at how Wall Street closed on Friday, because the S&P, while it rallied 1.2%, it ended on the day up 1.05 to surpass its prior all-time high, though set at the start of 2022. Well, precisely 2 years in the making, with a 28% pullback in between. The push to new highs was supported by the tech sector, buoyed by Taiwan semiconductors, better than expected earnings as well report, and a broker upgrade for Apple Meta platforms also closed at an all-time high. There was also a giddy mix of data within the University of Michigan's Consumer Sentiment Survey also helped fuel the move. Notably, inflation expectations for the year ahead fell to 2.9%, the lowest since 2020 from 3.1. You can see as well the Dow Jones and the Nasdaq Composite, the tech-heavy Nasdaq, also ended higher on the day on Friday. Well, let's have a look as well at how things are looking pre-market in the US. Well, we've got set for a higher open as well, with the US 500 currently set to open 0.21%. The US Tech 100, that's the Nasdaq, also set for a higher open, up 0.62%. And then as well, the Dow Jones Wall Street due to open at zero, set to open higher as well, currently up 0.07% pre-market. Well, investors are now going to be awaiting reporting results from the Magnificent Seven, starting on Wednesday with Tesla, Microsoft, Alphabet and Apple follow next week. Then Meta will follow, and Nvidia as well. All the tech giants accounted for around 2/3 of the S&P 500 gains last year. But can they repeat those extraordinary returns in 2024? Well, we shall certainly see. Well, moving on, let's have a look at what else we've got coming up today and this week. Well, China LPR. So the People's Bank of China kept the loan prime rate steady at its January fixing. The one-year loan prime rate was kept unchanged at a record low of 3.4%. 5%, while the 5-year rate was kept at 4.2%. Well, this came as no surprise after the PBOC kept its medium-term facility rate steady last week. Well, since the start of the year, the Chinese yuan has been weakening against the dollar, giving the PBOC little room to maneuver. A rate cut at this stage would further depreciate the yuan. Well, let's have a look at what else is happening this week. And 3 major central banks are due to decide on their monetary policy this week. First, on Tuesday, we've got the Bank of Japan, which will also publish its quarterly report. It will be followed by the Bank of Canada's decision on Wednesday and the European Central Bank's decision on Thursday. Now, if we put aside the Bank of Japan, we can say that the market expects a rate cut soon, and maybe sooner than what central banks were now planning. Last week, for example, Fed board member Christopher Waller said the path of policy change must be carefully collaborated, not rushed. Atlanta Fed President Raphael Bostic said inflation could seesaw if the central bank cuts rates too soon. In Davos, European Central Bank President Christine Lagarde said that too optimistic markets won't help the ECB inflation fight. Meanwhile, the Bank of Canada is expected to keep its overnight rate forecast at 5%, leaving borrowing costs at a 22-year high. Latest data showed headline CPI growth accelerating to 3.4% in December, and that was from 3.1% the previous month, while economists predict that inflation will eventually return to a target rate of 2% by 2025. In the meantime, inflation is expected to be a bit higher at around 3.5% until mid-2024. Well, the US dollar-Canadian dollar pair is up on the day, 0.06%, snapping a 2-day losing streak. Moving on as well, and just to the ECB, because that's expected to stay put as well on Thursday. The main refinancing rate is forecast to remain at 4.5%. Deposit facility rate, well, that's expected to be at 4%, and marginal lending rate at 4.75%. Well, the question remains, when will central banks start lowering rates? At the end of last week, Christine Lagarde said that it is likely the ECB would start cutting rates this summer. Investors will surely be expecting the ECB president to expand on this during her press conference on Thursday. Well, the euro-US dollar, well, the pair has been on the rise since the 19th of January. Although it edged lower since early trade, but still up 0.05% on the day. And as for the Bank of Japan, well, new inflation data published could give the Bank of Japan a bit more time to phase out its monetary stimulus, keeping alive market expectations that the central bank will put short-term interest rates out of negative territory around April. Well, for now, the key short-term interest rate is to remain at minus 0.1%, with 10-year bond yields targets, well, that's to stay at around 0%. And the dollar yen, well, since Friday, the pair has fallen down 0.8% on the day. At the moment, the Japanese yen, however, might struggle as expectations that the Bank of Japan will not pivot away from its ultra-dovish monetary policy stance on Tuesday. And let's have a look at other stats to expect. Well, a few macroeconomic indicators will give the markets and central bankers food for thought this week. On Wednesday, manufacturing services PMI flash will be released around the world. Apart from services activity in Japan, UK and US, the US, every reading is expected to remain below 50 in January. Then on Thursday, Germany IFO business climate and a preliminary reading of US Q4 GDP growth rate. That's due too. And on Friday, the US core PCE price index to watch out for. And then US earnings season will resume at lunchtime with a report from United Airlines. Well, the street anticipates earnings of $1.70 per share for the October to December quarter, to be compared with $2.46 recorded the same quarter a year ago. Meanwhile, revenue is expected to rise to $13.54 billion from $12.40 in Q4 2022. Well, the expected EPS is also substantially lower than the $3.65 posted 3 months ago. In October, United Airlines warned that Q4 would suffer from higher costs as it forecast its average fuel bill to increase by 11% in Q4. Well, during the past 3 months, the stock recovered a bit, but it's bears no comparison with the drop from the July 2022 high. And after a relatively quiet week, the pace of US earnings publication will really accelerate from tomorrow when the market expects reports from Netflix, Johnson & Johnson, General Electric, Procter & Gamble, and Verizon. On Wednesday, IBM, Tesla, AT&T, followed on Thursday by Intel as well, Visa, American Airlines too. Well, American Express's quarterly earnings will conclude this busy week. But let's come back to a few stocks I just mentioned as well, because Netflix is scheduled to report earnings on Tuesday after the close of US markets. The street expects earnings of $2.20 per share on revenue of $8.71 billion. Well, Netflix's performance in the third quarter of 2023 really was remarkable. The company's achieved an impressive 8% growth in revenue with a net addition of 8.76 million paid memberships. For Q4, Netflix had previously said it anticipated the continuation of robust user growth momentum. Well, according to its own forecast, Q4 revenue is projected to increase by 11% year over year, and the net addition of paid memberships is projected to be close to the previous quarter, potentially with another 8 to 9 million new subscribers. Wow. Well, Netflix's share price since the start of January 2023, well, its stock has gained nearly 73%. Well, moving on to Tesla, and the electric EV maker will update the market with its report for the fourth quarter. Analysts anticipate earnings of 72 cents per share. Revenue is seen at $25.52 billion. Once again, one key metric for investors is margin. Throughout the year, Tesla has been cutting its vehicle prices, focusing, as Elon Musk pledges about 12 months ago, on sales rather than margins. Automotive gross margins topped in Q1 at 30%. They were down at 16.3% in Q3. Investors want to know where the bottom is. Well, since the start of January 2023, Tesla's share price has gained about 120%. Well, it's also going to be a big day for the airline sector. On Thursday, the main company releasing quarterly reports will be American Airlines. Earnings are expected at 11 cents per share. Revenue should come in just over $13 billion. And also we've got strong demand as well. Let's have a look. Both domestic, it's likely to have played in American Airlines' favor, but the market will be looking at the total value per available seat mile. For Q4, it's expected to be down between 5.5% and 7.5% year over year, while American Airlines' share price is down on the day about 1%. And then oil, let's just have a quick look at the price of oil this morning, and I will just quickly pull up the price chart for you. We've got Brent currently down on the day 0.26%, trading around $78 a barrel. And then if we look at US crude, also down 0.29%. Oh, sorry, yes, 0.29%, trading around $73 a barrel on the day. Well, last Friday, Baker Hughes' total rig count increased to 620 last week from 619 the previous one, and the number of active oil rigs fell as well by 2 to 497. Well, that's all we've got time for this morning on IG's early morning call. Do tune in for our Beat the Street show ahead of the Wall Street Open, and keep across our social media platforms for market insights, analysis, and updates. Thank you for watching. Have a great day.